Every major financial institution on Earth is facing the same silent crisis, one that most people never see, one buried so deep inside global banking infrastructure that it feels invisible until you understand how money truly moves behind the scenes, and once you see it, you realize instantly why XRP is not just useful, but absolutely essential. Today, billions, even trillions of dollars sit locked inside Nostro and Vostro accounts all over the world, quietly waiting in the background of the global financial system. These accounts, which are essentially records of money that one bank holds in another bank's currency, are a fundamental part of how international banking works. But while they're necessary for cross-border transactions, they also represent a massive inefficiency that most people never see. This money is trapped inside a broken system built in the 1970s, a time when global finance was far less connected than it is today. Back then, banks were forced to pre-fund accounts in multiple countries just to make sure that a cross-border transfer didn't fail. The system was designed for reliability, but not for speed or efficiency, and it hasn't changed much in decades. Imagine a bank needing to send $100 million overseas. It sounds simple, but the reality is far more complicated. The bank can't just wire the money and be done with it. Instead, it has to make sure there's enough cash sitting in a foreign account ready to go before the transfer can even happen. In the old world, and this is the part nobody tells the public, that same bank must tie up another 100 million or even 200 million in a foreign account just to support liquidity. This is all about making sure the money is there when it's needed, but it comes at a huge cost. That means $200 to $300 million of capital frozen, earning nothing, sitting idle, not being used for investments, loans, growth, or risk management. This is money that could be fueling new businesses, supporting communities, or driving innovation, but instead, it's stuck in limbo, trapped by outdated processes that no longer fit the needs of our fast-moving digital world. Scale that across the global financial system, and you begin to see the monster hiding in the shadows. Over $27 trillion trapped in dormant accounts worldwide, frozen capital that does nothing but wait for payments that may or may not occur. This inefficiency is suffocating banks, bleeding institutions dry, and crippling liquidity in developing markets. But this is exactly where XRP steps in, not as another speculative token competing for attention, but as the first digital asset designed for the single most important financial function on Earth, real-time liquidity bridging. XRP acts as a neutral bridge currency between any two banking systems, allowing banks to move money globally without pre-funding, without trillions in dormant liquidity, without the archaic infrastructure that slows the world down. Traditionally, banks have had to lock away massive sums of money, sometimes hundreds of millions of dollars, just to send a portion of that amount across borders. This process is slow, expensive, and ties up valuable capital that could be used elsewhere. With XRP, banks can instantly convert their funds into a digital asset, eliminating the need to pre-fund accounts in foreign countries. This allows them to move money across borders in just 3 to 5 seconds, regardless of the time of day or the location of the recipient. Settlement happens almost instantly, so the funds are available for use right away. This new liquidity means banks can reuse their capital, making it available for other transactions, loans, or investments. Instead of money sitting idle, it re-enters the global economy, fueling lending, investments, and the growth of markets around the world. This increased efficiency leads to more expansion, more business opportunities, and greater economic growth for everyone involved. Now imagine multiplying this effect across thousands of banks and financial institutions worldwide. The result is a truly interconnected global financial system where value moves as quickly and freely as information does today, ushering in a new era known as the Internet of Value. This is the natural evolution from the Internet of Information, transforming how the world exchanges value and creating opportunities that were never possible before. Just as the Internet revolutionized the way we share information, making it possible for data, ideas, and knowledge to move freely, instantly, and at almost no cost across borders, the next great leap is already underway. This leap is about value itself, money, assets, and ownership. Imagine a world where sending money is as easy and seamless as sending an email, where value can flow to anyone, anywhere, at any time, without barriers or delays. The Internet of Value is set to transform the global economy by making money move with the same speed and efficiency as information. No more waiting days for international transfers, no more excessive fees, and no more complicated intermediaries. And here's the part no one can deny. This new era demands a new kind of infrastructure, one that is open, neutral, and accessible to everyone, everywhere. The world cannot build the Internet of Value without neutral bridge assets, digital tools that connect different financial systems and currencies, acting as the backbone for seamless global transactions. These are digital settlement tools that don't belong to a single nation, aren't tied to any one government, and are designed to work across borders. They aren't controlled by any central bank, and they operate independently of traditional financial power structures, ensuring fairness and accessibility for all. These assets can move frictionlessly between every currency pair on the planet, unlocking new possibilities for trade, investment, and innovation. That's exactly where XRP and XLM become indispensable. They are purpose-built to serve as these neutral bridges connecting the world's financial systems in real time. They aren't just assets. They are the rails. They are the bridges that make instant borderless value transfer possible for everyone, everywhere. They are the connective tissue that allows the entire global economy to interoperate in real time, breaking down barriers and creating new opportunities for growth and collaboration. Without them, we're stuck with the clunky, pre-funded, capital-draining disaster we have today, a system that holds back progress and limits what's possible for people and businesses everywhere. And if this were just a theory, if it were just a concept written in white papers, banks would have walked away years ago, but they didn't. Instead, despite every challenge, every headline, every regulatory storm, more and more financial institutions continue moving toward Ripple's technology. Asia's banking sector embraced ODL corridors. The Middle East is expanding Ripple net usage. European banks are deepening partnerships. African institutions are integrating cross-border remittance solutions. Even during the worst periods of uncertainty, banks didn't abandon XRP. They multiplied, they onboarded, they continued quietly preparing. When the rest of the crypto market was distracted by hype cycles, banking infrastructure builders were meeting behind closed doors, testing liquidity corridors, analyzing settlement speeds, and running pilots that will eventually scale into global rails. These banks understand something most retail investors don't. Money is about speed, liquidity, and interoperability, and XRP solves all three at a scale the world has never seen before. Liquidity free does not just money unlocked, it is opportunity unlocked. It means cheaper remittances for families across borders. It means higher velocity of capital for businesses scaling globally. It means banks can operate leaner, faster, and more efficiently. It means emerging markets can finally access global settlement systems without needing trillions in dormant capital they simply don't have. That transformation is not optional, it is inevitable. Global adoption won't happen because people believe in XRP. It will happen because the legacy system is dying, liquidity is drying up, and the world needs a solvent, neutral, universal bridge asset before the entire global payment infrastructure collapses under its own inefficiency. XRP is not replacing banks,